What's going on, guys? Today in this video, I wanted to go over my thoughts of the stock market for the month of June, as well as some buying and selling opportunities that I have in my portfolio, and some potential stocks that I'm looking to add to my portfolio for the month of June. So without further ado, we'll get right into the video. As you can see today, I'm up $39. I am currently having a green day. The majority of my stocks are in the green, except for Apple Hospitality and Gladstone Capital. Those companies, their sectors are currently down as the federal government is weighing on whether or not we will have an interest rate hike for this month. If that does happen, I do expect Apple, Glad, and PSEC to take significant hits to their stock price and present buying opportunities for anyone who's looking to get into them. We'll just take a look at each one of them. Right now, Apple is down 20 cents for today. It's down 48 cents for the week. If they do say that they're going to raise interest rates, I maybe see a 50-cent decrease. So I think it'll go down to that $18 mark, maybe $17.90. If that does, it's not going to be around my average cost. So I don't think that it'll present a buying opportunity for me to add more shares of Apple Hospitality. Next is Glad. Glad's current price is $9.19. My average cost is at $8.77. I do think that this company has the potential of going below my average cost. And the reason why is because the owner of the company picked up a big portion of shares a little under a month ago, and that shot the price of the company to this $9 threshold. And the company has a low market cap. So while people weigh on whether or not this business will be hurt due to rising interest rates, there will be a sell-off, and it may potentially open up a buying opportunity for me to buy more shares of the company. I don't want to buy into companies and kill off my appreciation when they're producing dividends and I still have a stock appreciation of the stock. So I only buy if it's underneath the value of what I paid for. Next is PSEC. I think PSEC is the closest company to my actual average cost. It's currently sitting at $6.88. My average cost is $6.56. So again, if the interest rates do rise, speculation starts to hit and people start to do sell-off on business development companies and real estate investment trusts. So there might be a buying opportunity for me to pick up shares there. The reason why I do like those sectors is because they generate monthly dividends that I apply to my portfolio. Apple produces a monthly return dividend of 10 cents a month per share. Glad produces a dividend of 7 cents a month per share, and PSEC produces a dividend of 6 cents a month per share. So if you like dividends and you are looking for monthly dividend companies, those are some companies that you can do your due diligence and see if you want to invest in. The next stock that I want to talk about is Chron, the Cronos Group. They are a medical marijuana company. And the country of Canada just voted for the use of medical marijuana. So they will be making some big plays in Canada now, as marijuana is now legalized for recreational use as well. I do expect this stock to take off. My exit point is probably between the $10 to $15 range. I haven't made up my mind on where I will exit. So once this hits about the $10 range, I'll probably be looking to dump my shares of Cron. I haven't decided where I would put that money at yet, so I'm still working on that plan. The next company that I want to talk about is Comcast. This is my long-term pick for life. I'm looking to leave the shares that I accumulate of Comcast to my children when I pass off. This company is a huge company. First off, the market cap is $149 billion industry. It is a utility company when we think about the internet. It owns it owns Universal Studios. It owns NBC, and they are currently looking to take the play away from Disney to own Fox. I am a huge believer that they will probably pull off that deal and maybe steal the Fox deal away from Disney. If that happens, the company will have a 60% ownership of the company Hulu. So that's like investing in Hulu when you think about it, because the only three companies that own stake in Hulu is Comcast, Fox, and Disney. They all own 30% of Hulu. And if Comcast is able to do that, they will be able to, in a couple years, rival Netflix, exactly what Disney is trying to do. And I just think that this is a cheap entry cost. So this will probably be, while I'm in a dormant state of trying to figure out where I'll probably be putting Cron, is probably a given that I'll probably be putting it into Comcast. The next stock that I wanted to talk about as a potential play is T-Mobile. I will probably be looking at adding some shares of T-Mobile. As you can see, Sprint and T-Mobile are in the green today, as that AT&T deal from yesterday happened, where AT&T was able to basically buy Time Warner, and the courts allowed that play to happen. So I'll be looking at companies who are looking to make business decisions that will prosper for them for the future. So that is basically my play for the month of June, is to buy up more shares of Comcast. Maybe if Cron hits that $10 mark, exit out of Cron. If my business development companies or real estate retail investment trusts go below my my average cost, maybe buy into them. If you guys have any questions or comments, feel free to let me know, and I'll see you in the next video. Thank you.